So can you see my screen?
Yes, I can see it.
All right, so for today, let's talk about internal and external range structure from a standard perspective. But before we do that, you're okay with us going into liquidity on the next topic, right?
Yeah, yeah, that's fine.
Okay. So we're going to be using the current structure of GBP USD from what happened within last week. I don't know if you noticed the trade I took within the community group chat.
I don't think so. No.
Okay, so I took a trade on GBP USD from this point. I sold from this point and then closed at this point. I was looking for a buy, but I was not active, so the buy happened. But I would also explain why I sold from this point and why it's considered internal and external range liquidity. Okay?
Hmm.
Because at the same time, you have to understand that sometimes I say internal and external market structure, and sometimes I say internal and external range liquidity. Do you notice them? I'm going to make a drawing now. Can you hear me?
Yeah, last 15 seconds I could not hear you, but yeah, you were telling me about you took a trade, the sell trade and the buy trade, and about liquidity you're talking, then you went mute.
Okay, so I said I'm going to show you some concept around why we have, if you notice, sometimes I say internal and external range liquidity. Sometimes I say internal and external range structure. Do you notice?
Right.
So I'm going to give you insights to why I say that and the difference between both of them and what they both means. They actually mean the same thing, but the concept behind them is actually trying to understand market structure and liquidity. So our next topic is going to be on liquidity. So on that aspect, you understand more of what we call liquidity more because you should have a lot of insights to what we call market structure from what I'll be showing you today. Okay?
Okay.
So now what we have as internal and external range liquidity is as simple as what I just drew on my screen. If you notice from my chart, you would notice that this range from this high to this low had multiple lows and highs internally. That is within this particular range. So this single lane is called the range. That would say, let's say that was this. Okay.
Hmm. Yeah.
So what forms this single range is created by multiple lows and highs, right? So you have them low, high, low, high, So this is the structure that forms this particular range. So on market structure, price is only breaking this low. This is considered a break of structure once multiple lows and highs from a new range has been created and breaks the swing low of this low. So, and when this range is being created, price returns back, probably because there was a previous break of structure here. Price returns back to clear out highs, swing highs from previous internal structures. So the formula of a new range is simply price returning to a previous range to clear out market structure, the internal market structures. Okay, so I said, but you notice what I said about this range, right?
Yes. Yes, I heard that.
Okay,
Yeah,
so that,
that's fine.
the price creates this range using internal structures of highs and lows. That's the
Yeah.
example I showed you here. Now, for
Yeah,
a
yeah. Right.
retracement to happen, a retracement is simply price retracing into a previous range to clear out liquidity within premium or discount level. So we have this as premium. We have these points as premium. We have this point as discount. Okay. So have you
Hmm.
heard
Right.
of premium and discount before?
Yes, I heard about that before.
All right,
Yes.
so this is what is used for. It's used to measure the level of the range. So what happens is that whenever there's a break of structure, we expect price to retrace into premium of the previous range. So what happens is that why did this not change? Okay, so it's changed to discount. So we have discount and premium. So this new range that is being formed is simply price returning back into premium to clear out previous internal highs of this previous range. So what I drew with that line is price clearing out an internal high. So when this is happening, this is now called the clearing out of the internal range liquidity. So price is clearing out the internal range liquidity because these previous highs becomes liquidity once price is bullish. The previous bearish highs. So when the trend changes, the previous highs becomes liquidity. They become a target. Okay, and that's what you see
Right.
happening here. And this is what we call internal range liquidity. So once price, sometimes price clears this out. Sometimes price creates more liquidity. So this would be the internal range of this previous range. Okay. So
Hmm.
the retracement of this, let's say, would be this. And price retracing was simply price going to clear out the internal range highs. This was mitigated rather, mitigated because of this high that was created here. And this high would be considered as liquidity. That's a different form of liquidity as well. But I will explain that to you on the next topic. But this was the reason why this other block got mitigated at the same time. But this other block, this same other block could be liquidity if price decided to do, a poke of this high. It's very, very possible because, price is clearing out internal range liquidity, and that is a retracement of this range. But what you have to understand is that what is called market structure is that this is the internal structure. These are internal structures. These highs are internal structures. But when price is clearing out, is heading to clear out the swing low, which happens to be this point, which is what we call a swing break of structure, is now what is understood as an external range liquidity. Because once you see something like this, this is a model, okay? This, what happened here is a model. Price clears as liquidity, mitigates another block, and gives a drop, an engulfing. So price engulfs this previous candle from this point, and then gave an entry here. So this was an entry. Entry one was there, and entry two was when price broke this low with this huge momentum. So price created this, but failed to clear at this low, which is creating liquidity again. And then that creates the engineering liquidity for the external range. Entry number two was at this point when price mitigated this fair value gap. You know what's the fair value gap, right?
I've heard about that. Yeah, when there is a imbalance, like in candles, they go in one direction, leaving imbalance behind.
Yes. So you see this as you see the imbalance here, right?
Right.
Let me take everything out. You see the imbalance created here, right?
Right.
So price came back and filled that imbalance. That was an entry. So you know this is an entry when you know that they were heading to clear out this low. And they're only heading to clear out this low because you have seen that the price, the main range is bearish. And the price has cleared out this liquidity, engineered this liquidity. When I say engineering a liquidity, I mean they created an accumulation. So an accumulation was created here. So on tomorrow's topic, sorry, on the next Zoom topic, when I'm teaching you about liquidity, I'll be showing you how different models of liquidity are being engineered from accumulation, manipulation, distribution to inducement. So this accumulation that happened here was an inducement for this other block. And that was the reason why the other block hold. So the inducement came in and price mitigated this other block and gave this first sell model, which is engulfing this other block here, this buy to sell candle. So there was an engulfing here, and the price retraced to mitigate that point. That was the first entry, aggressive entry. Then price created a change of character, but when price cleared this low, okay, market structure, basic market structure. You know that, right?
Yes, yes, yeah. I just had a question
Okay.
on premium and discount. Like in this chart here, the GBP USD. So this retracement back up into the order block. If we draw the Fibonacci, isn't it like this is still in the discount range? It did not go to the premium
Well,
before going down.
there's a thing about internal and external range liquidity I probably did not explain to you. Is that a range, this is a law. A range is only broken when there is a break of structure. Okay? And by definition, if you look at this range from this point, from this internal range here, this never got broken. You know, right? All this happened as an internal structure because if you look at this retracement here, price broke structure here formally and never really created a new range. So this is not considered as a new range. This would be the range high. Okay?
Mhm.
And if this was the
Mhm.
first swing high that was created to form this previous range here, let me say this was supposed to be the high, right?
Mhm.
And then this was supposed to be this the former structure, right?
Right.
Let me take this out. Let me take this out. So what would be the only thing that happened? What would be the point that happened that created this mitigation? It would be that a manipulation happened here when price failed to, continue the drop from here and then went back up to clear out this high, which now makes this a valid accumulation. So this is a liquidity model, like I mentioned earlier, and this is something we see around swing points. So liquidity was engineered here. And then if we're mentioning premium and discount, we would understand that this is within what? Premium
Mm.
of this range, which price never
Right.
broke in the first place. Did you understand? So before we would mention or measure
Yeah,
the
yeah.
premium of this range, which as you can see, this is happening at
Mm.
the 50%, we have to make sure that this internal range has been broken, or then this internal range is still valid. So this would be a
Mhm.
liquidity hunt, and then this would be the formal structure.
Right.
And then this would be a low, a lower high, and a lower low, creating internal structure because this actually tested the 50% of the Fibonacci, right?
Right.
So you understand what's going on now?
Yeah, yeah. It makes sense. Yeah, I was up to that low there. Now it makes sense because it has own internal structure which have their own internal ranges which have their own premium and discount, and I have to watch
Exactly.
for the manipulation happening in there.
Exactly. So this was a new structure that was being created as a retracement. And then on this bullish range, as we can see, price then broke this low. And if price broke this low, that's a change of character, right? So this entry is actually an active opportunity, which happened from the fair value gap, right?
Right.
So smart money works. It works. You just have to know, what you're looking at the moment. Now, this is we looking into internal and external structure. You have to understand that these are different concepts. We have the concepts from smart money. We have the concept from liquidity. We have the concepts from fair value gap. We have the concept of order block. We have the concept of Fibonacci ratios. And I'm happy you have different ideologies of what I'm actually talking about here because it makes this whole mentorship easier,
Mm.
you know. And what you have to understand is that all you have to do is to identify what is happening at the market at the moment so you can know which concept to apply.
Mm.
You understand? So let's say, for example, like what happened on this point here. This is what I would say the swing low. And then
Mhm.
these are internal structures, right?
Right.
So this was an internal high, this was an internal low, this was an internal lower low. So if we take everything out, And then you observe this market structure here. Okay. All we can say is that there are multiple fair value gaps that were created on this range. I'm not going to make the class too long so it's easier to digest because we don't have much to say. Everything we say is valid to the same thing. So I'm not going to make it that difficult. So we have another fair value gap here.
Mm-hmm.
Okay. So price mitigated this fair value gap and price came back, mitigated this fair value gap. Simple as that. In the process of
Mm-hmm.
mitigating this fair value gap, this supply zone, you know what supply and demand zone, right?
Yes, I do. Yeah.
So this was a job-based job, right?
Mm-hmm.
And the price just came back, mitigated this fair value gap. As simple as that. So smart money is all about different concepts. What I just did here is completely different from what we did here and what we saw in the price action. So you don't have to say because you know smart money as a model, because you know some certain model that says price clears out liquidity, you have to always find the price clearing out liquidity. No, that's the one mistake everybody keeps making, and it keeps not working for them because they keep thinking smart money is a single model, and that model is something they are familiar with as something like this. I don't know if you've seen something like somebody saying something like this as smart money concept, right?
Mm-hmm. Right.
There's always this perception that smart money concept is all about price clearing out liquidity and mitigating the fair value gap or mitigating the supply or demand zone above. This is true, okay, but this is not what I just did here, right?
Right.
I just simply identified what was happening on market structure. And that's what I want you to understand. Because you don't have to always look for this, because you're not always going to see price doing that, which is what happened here, which is the manipulation of creating liquidity and mitigating the other block. They are both what? Smart money concepts, because these are all bunch of concepts. Or that's not what's going to happen here, which is just price mitigating the fair value gap.
Mm-hmm.
At the same time, what happened here, this IPA candle getting multiple tests as price flips structure by carrying out this swing point. So on the bullish side, we're seeing a change of character. We're seeing a bullish structure being formed from this high to this point to this point. So most likely this is getting cleared out. And then we might see a retracement again. And then either these points are going to get cleared out as price is now hunting internal range liquidity. So all these points all becomes internal range liquidity because this is internal structure. So price might do this till it gets to this point, accumulating more and more highs and lows, and then at the end of the day, does something like this to either go bearish or goes bullish to clear out this high. But all that is all an assumption. All we do is follow what we see at the moment. That was how I got this trade. You can't assume what's going to happen next when you don't know what's happening. This is all the game of probability. Okay. Nobody knew that this was
Right.
going to be a reversal because this is now market moving bullish. And then nobody know
Mm-hmm.
if, this is not going to hold. All we do know is that the model of what market structure is doing is clear. So you always follow the model that is being presented to you, not the pattern you're familiar with. I don't know if you understand my language. I'm speaking about art and science. Following models is science because you look at the structure of what's being built and then you try to identify what model is available at the moment. Is it price mitigating a fair value gap? Or is it price clearing out liquidity to, mitigate another block? Or is it price just, clearing out liquidity? Or do you have a reversal? What's your model? That's science. But when you go to smart money and then you start to look for where is the liquidity, where is the other block, where is the fair value gap, that's art because you have a pattern in mind you think is what you're going to look for. But all what makes smart money work is that we look for the models. We don't know which pattern we're going to trade. We only know what model we're looking for. Do you understand me?
Yes, I do. Yeah.
Okay, so when we say internal and external range structure, do you have an ideology of what I'm talking about now?
Yes, yes, I do have. Yeah.
Would you say that is enough to call it for a day so we can have liquidity the next day? I'll send you the recording privately so you can watch it again so you have an idea of what I'm trying to preach today.
Yeah, I'm sure that works. Yeah, we'll go through recording as well, and any other resources you'd like to share to me, just to, strengthen my knowledge on
Yes,
the
yes.
internal
Sorry
and
about
external
that.
range structure.
I was
That'd be
supposed to
helpful.
send you some information, but I didn't know what to send because we didn't have a curriculum. But now we have actually
Okay.
looked into internal and external range structure. I'm going to send you things based on internal and external range structure. And then when you look into those, next week we'll look into liquidity because they are all supposed they are, it's a single ebook, okay? But what you read is going to be based
Mhm.
on what I've taught you today. Do you understand?
Okay.
And then
Yeah.
it's going to be a follow-up with the recording, and then we'll see what we'll do on the next class. Okay.
Sure, sure. Sounds good. Sounds good.
All
Thank you
right.
so much.